Hey guys, Tom here from the Investing with Tom YouTube channel. It's a beautiful Sunday morning here in New Zealand, sun's shining, summer's on its way. So I thought what better way to spend a few minutes this morning than talking about some introductory kind of information for if you're first just starting out and investing in the stock market. And first off, we're going to sort of talk about what is the stock market, what's a share. So if you enjoy the video, please drop it a like. Love to hear your comments as well, and love to see you subscribe for some future videos. But for now, let's get into it. Alright, so let's talk about some really basic sort of concepts for first getting into the stock market and understanding what the stock market's kind of all about, or the share market as it's often called on this side of the world. So essentially the share market is an exchange on which shares of a company are traded between individuals. So first you need to understand what a share actually is. So essentially a share is a small fraction of ownership in a publicly traded company. So if a company is publicly traded, it just means that it's registered on the stock exchange and you can actually buy and sell ownership in that company. So the best way to think of a share is it's sort of like the pizza was the company was sliced up into 8 pieces of a pizza. And buying a share is like buying one of those pieces of pizza. So that piece of pizza is now yours. You own that fraction of the company. And that has some benefits for you. So you can buy and sell that piece of pizza at any point in time. You can buy more than one of them. Oftentimes there's in the tens or hundreds of millions of shares available on the market. So you can buy a fraction of a company with a very small amount of money if you're just starting out. So the shares in New Zealand, for example, that are it's not uncommon to see companies trade around even just $1 or $2 a share. In the US, the lowest they'll tend to get is probably about $5, and they'll go up to a couple of $1,000s a share for something like Amazon, or if you're looking to get into a Berkshire Hathaway A-class share, which is Warren Buffett's company, you'll have to fork out sort of $300,000 for an A-class share. So that's what a share is. Essentially, it's a small piece or a fraction of ownership in a company. So let's talk about why you would actually go and buy a share in the first place. What are some of the benefits and some of the risks of doing that? All right, so the best way I find to think about owning shares in a company is, or on the stock exchange, is just to think about what would happen if you had your own business or you owned a privately held company in your area. So owning a share in a publicly traded company in a lot of ways is no different to having your own business and some of the benefits that you can get from that. So there's two main ways that you can actually make money in the stock market. There's many more ways than what I'm about to explain, which are much more complex, with things like shorting shares and options trading. But the two that I'm going to speak about, number one is capital appreciation. So if you own a business and that business grows over time, that business is going to become more valuable, and it's no different when you own shares in that business in the stock market. So if you buy a share at say $5 in ABC company, and 10 years down the track that company is now 3 times as large, that share is going to have approximately 3 times the value. It's not always that simple with high growth companies. You tend to have to pay sort of a premium type price when you first get into them. But that's the basic principles. There's capital appreciation when companies grow and they continue to improve in their performance. So that's the number one way that you can make money by owning shares. The second most common way is getting paid dividends. So dividends, which you may or may not have heard of, are essentially the way that companies pay their profits out to the owners. So if a company makes say $100,000 a year and they might go ahead and reinvest some of that into the business for growth, but they may also pay a large chunk of that out to their shareholders. So Oftentimes when you're looking at shares online, you'll see a little dividend section which essentially tells you how much over the last 12 months that company has paid their shareholders in dividends per year. You may also see that expressed in a percentage form or something like a yield, and you might see that companies pay anywhere from, say, 1.5 to maybe 5 or 6% per year in dividends. So that's the second way you can make money in shares. So let's take a little bit of time to talk about some of the risks of getting involved in the stock market and buying shares, and some of the things you need to watch out for there as well. All right, so in terms of risks in the stock market, I guess when you first sort of mention that you're thinking of investing in the stock market to a large chunk of people out there in the world, a lot of people don't really understand what that actually means, and a lot of people get very scared because they see on the news, in 2008 there was a huge recession, stock market crashed, same thing from sort of 2000 to 2002, same thing happened in the 80s, same thing happened in the 20s, and a whole bunch of times in between. So one of the main risks in the stock market is that prices can crash pretty rapidly. So it's not uncommon in a stock market crash or recession to see the prices of companies drop by 30, 40, 50%. And that is a real risk, especially if you're looking to get out of the stock market soon. If you're sort of in the later stages of your working life and looking to retire soon, you probably don't want to have money tied up in a company that can potentially go down 50% within the next year or two. That is always a risk. Over the very long term, if you're looking to invest over decades, I'm in my sort of early mid-20s myself, and I'm gonna plan to be investing for a long time, so something like that isn't a huge issue for me. Over the very long term, the stock market does outperform almost every other asset class, except for maybe the Bitcoin warriors out there. But it outperforms every other asset class there is. And both capital appreciation and reinvesting your dividends can be very powerful for compounding your wealth over time. So that is a risk though, and something you've got to watch out for, especially in very high growth companies. Something we'll get into a little bit later on the channel is how I actually go about valuing shares in a business. And you've got to be very careful that you don't overpay for shares in a business. Even if a company, doubles in size over the next few years, that's a great company. But if you pay too much for it when you first get into it, you can turn a great company into a pretty bad investment. So those are some of the risks. Over the long term, the stock market is sort of safer and safer the longer you stay in it. Essentially, if you're betting or if you invest in a large number of different companies, you're essentially betting on the companies or the country even that you live in to be bigger in 10 or 20 or 30 years time than it is today. So throughout history, that's been a very safe bet. If you're investing in individual companies can go broke. So there's things you can watch out for. You can keep an eye on things like debt levels, and the actual price you're paying for a business is a massive one. So that's something I'll talk about in a future video on the channel. For today, I just wanted to introduce the basic concept of what is a share, why would you invest in it. You can get much better returns than what you do with money sitting in a bank or even in real estate a lot of times. And I hope that was useful. So if you did get any value out of the video, please subscribe, give the video a like, and love to hear your comments as well on your thoughts on investing. And if you've got any other questions or any other topics you'd like me to talk about, feel free to drop them in the comments below. But that's me for now. Cheers.